Good morning, traders. This is Brad Matheny. Today's the 7th of October. We're watching the markets, pre-market, to see if we get back above yesterday's or Friday's close. This is the Plan Your Trade video. And we're looking for a pretty solid melt up this week in the SPY. So now I've started doing this thing called the roadmap. Really what it is it's trying to outline what is going to happen this week and what you can expect this week and possibly into next week related to price action. Now, we're still relying on the SPY cycle patterns to tell us what's going on. We have a gap up lower today, a gap breakaway, breakaway pattern in counter trend mode, a carryover in carryover mode, and an inside breakaway in trending mode. That gives us this week. Here's our gap up lower. Here's our gap breakaway. Here's our counter trend mode. Here's our carryover into the end of the week. And then we start into the following week, which is a gap down higher pattern. It's actually a gap up lower pattern in counter trend mode. Then we have this potential pullback. You can see here off this gap breakaway. I'm drawing it as a gap down breakaway. It may be a gap up breakaway. Then we have the breakaway pattern in carryover mode, then carryover in trend mode, then a temporary bottom setup. So where we're at with this is we carry over, we get our temporary bottom. So this is the temporary bottom setup right here. And that should rally into the end of the week. Okay, then we'll go ahead and do next week. So I've actually done a full week here. 1, 2, 3, 4, 5 into Friday. 1, 2, 3, 4, 5 into Friday here. So that's 2 weeks out. And what I'm trying to do is show you where the zones are for buying and selling based on these patterns. It's kind of how I look at the charts, trying to determine what the opportunities are to try to move forward. Now, we'll do the same thing here with gold. Okay, I'm going to move right to gold. I just learned a lesson trying to do the gold for you live is don't drag the charts around. I mean, I can do this, but don't try to resize my windows. So here's gold. Here's our rotation into the week. We didn't get that big rally into Friday. Okay, now we're going to come into gold over here. We're going to look at what we've got. This week, we've got a gap potential, top resistance, and then a consolidation pattern. So here's our gap potential. And what we're going to do, this is our gap potential right here. And it looks like I've drawn some of these, so I will just drag them down. Into maybe this area. And what we're looking at here is, like I said, we will come over here to the gap potential, top resistance, consolidation, temporary bottom. So we move into a temporary bottom back over here, which we will drag this. Oop. Ninth, 10th, right around there. Make sure these represent daily bars. This is a temporary bottom. And then we'll drag this over here. And then we have a top resistance, which will be a higher pattern. Typically, a top resistance pattern sets up a peak. Maybe something like this. So what we're looking at with this move here, this was a buy trigger. You can see I drew it here. And then we have the consolidation. Then we have the temporary bottom pattern here coming down and trying to move up. And then we have the topping pattern coming up and trying to move down like this. So if we were to look at this setup, if I come back in here and grab that, grab that, Control C, Control V, and drag it right down into here. That's kind of our setup. Okay, that's kind of our setup right now for gold. So we would be looking at, buying down in these lows, trying to get out at the end of the day today, looking to see if we get up into this 2680, 2690 area. Again, we would have that consolidation pattern tomorrow through here, moving into our gapping breakaway. This gives us our buy trigger here. You can see the buy trigger right here. So visual order, bring the front, visual order, bring the front. And then we got the buy trigger here. And this buy trigger will lead us into this rally, which will lead us into this sell trigger here. So remember, all of these typically are redrawn into here. And then we will look for a buy trigger down here. And a sell trigger up here. So you can see how these are playing out. Okay, this is essentially the roadmap for gold. So there you go. There's your roadmap for gold with patterns, with my gold cycle patterns. Basically, we're looking for a bit of a rally phase here. You can see we pulled back pretty hard right now, but we're just consolidating. Getting down here near these lows would probably be a pretty good buy trigger. Back into these lower channels from last week, all the way back over here. Trying to catch a high price up here at 2685. 2690 to get out of it, maybe anything above 2680, 81. Then we roll into this sell trigger consolidation pattern tomorrow. We should be looking for lows probably around 2670, 2675. Trying to load up near the end of the day for probably a pretty good rally phase here, maybe back up into 27, 2710. And then we move down off a temporary bottom. So you want to try to buy into this intermediate low, which will probably be around 2690, 2695. And then it should carry over into a sell trigger here into Friday, giving us a topping pattern as gold rolls over. Now, gold, like I told you, is going to continue to try to rally up into this 2750, 2780 area, in my opinion. So I'm giving you a pretty solid gold map here, roadmap for what's going on. And of course, this was the roadmap for last week, which actually played out pretty well. You see how we called the sell signal up in here, lined up with this point here, called the buy trigger down here. I just moved it down. We're looking for this. This is today's move here. We got a buy here, carrying up into our sell. We got a sell here, carrying down into our go flat. And we had a buy trigger here coming up into our sell. So you can see buy, sell, go flat, buy, sell, buy into this morning. And now we're moving towards this sell trigger up over here. So we did pretty good overall. I mean, I like to think they look good at this point. You tell me. How did you do on gold last week? Did you follow these triggers? What do you think? Okay, so let's go take a look at silver. The silver will follow along. I'm kind of out of order here, but yeah, silver's much weaker. Again, dollar strength is probably doing this. And we're going to see this play out as the dollar continues to strengthen. I did talk about this in the weekend videos for subscribers. We're in a shifting capital environment, and it's going to be hard to understand how the dollar dominance, as I call it, the 900-pound gorilla, is going to continue to play a role in what the markets are going to do over the next 90 plus days. We're moving into the Santa rally phase. We have the elections coming up. The dollar has strengthened considerably over the last 2 weeks after the Fed cut rates. Why? I mean, you think that it would rate cuts would have sparked a great rally in foreign currencies competing against the dollar, but no, and it's because the dollar is the dominant currency, and the U.S. economy is the dominant global economy. So we're seeing, even though rates are cut and China's spending like mad, stimulating, and others will do the same thing probably, you're going to find out that the dollar dominance is here to stay probably until 2027, 2028. So it's going to put some pressure on metals, but metals will continue to melt upward. So, give you an example, I expect silver to probably be up in the $33 to $34 area in the next 10 to 15 days, even though the dollar pressure is going to continue to drive that trend possibly a little weaker. Okay, QQQ moving higher again. Follow the trends. Here you go. I've laid out your roadmap, but I haven't actually detailed the buy and sell triggers. Follow the buy and sell triggers from the beginning of this video. We are rolling upward. We're a little bit lower today. We have kind of a gap up lower pattern. So pay attention. We could get kind of a downward cycle trend. I think it'll still be rather positive, and we're looking to buy into the end of trading today. Okay, that's really kind of where we're at. And lastly, we'll come over and look at Bitcoin. Bitcoin had a very nice bounce here, a lot more than I expected, but I want you to be aware that we are now at, let me come over here to daily. Whoa. We're now at critical resistance. And I want you to understand as I do this, the Fibonacci levels. So I've talked to you about this before. I'm going to come down here, and here's a 382, here's a 50, here's a 60 or 618. This is on this move. So now I want you to understand these Fibonacci levels are very, very important. They represent, call it the balance of price, the actual title levels. Now I'm going to draw a box right in here at the 382 to 50 level. So right here, 382 to 50 level. You can almost bank that price will retrace at this level and will attempt to, I'm trying to find a bright color, will attempt to, on a pullback, almost always go into this 382 to 50 level. So now, oddly enough, where are we on this move here? No, we come from these rejection points down to these rejection points. And look, oddly enough, we've got right into that 382 to 50 channel right there. Okay. So we're in a balancing act. This is indicating, because we got into new highs over here, the propensity to want to move up. That's a bullish cycle trend for Bitcoin. This pullback, taking out these lows, meant that it couldn't sustain this move here. Reaching the 382 to 50 level here means that it failed to take out this low and failed to take out these lows. Okay, that means that it's failing to establish new lows. Great, that's what we expected. That's where I expected this base and bottom. Why did I expect it here? Because I can draw these and I can see these Fibonacci levels right in my head. I don't have to try to draw them. I can see them. That's why I could see that we're right in the 382 to 50 level right here. And it's pretty simple. Map the high, map the low, figure out where the middle area is. There you go. That's how you do it. Okay. So now, where are we right here? This is a critical juncture for Bitcoin. If Bitcoin fails, it will move down into this area again, try to retest support, maybe go a little lower into this area, 57, 58,000 again. If Bitcoin is able to break away from this on a strong close, then we're going to try to come up here and really break away. So we are now in an uptrend, but we have rejected, as of today, we have rejected this move here. You can see right here, as it's trading, we are rejecting downward. There's our little doji bar. We got up here, we failed, we rejected. As of right now, there's probably a 70, 80% chance that we're going to move down into this area. So let me come clean this out. Get rid of all of my lines. I can always redraw them, right? Okay, get rid of this and get rid of this. So where are we with this rejection point? So this move here indicates that we're taking out lows. Okay, here is a standout high. We took this out. We are in a short-term bullish trend. So let me try to draw this here. We are in a short-term bullish trend through here. We are in an intermediate term bearish trend through here. And we are in a longer term bullish trend through here. How can I determine that, you ask? Well, let me take a look at this for you and try to explain it to you. It's all about Fibonacci price theory. So right now, price is established this high back here. This is a unique high. This is a unique low that doubles off of this low. So it's a double bottom. Even though this is the real low, I'm looking at rejection points. Okay. So this is essentially an attempt to break down through this low. It failed. It rejected. This was a downward trend. When it fails a downward trend, it reverts back into an upward trend. So we're bullish. Intermediate term bullish. What would cause us to go bearish is that we would have to see price come all the way down into this area right here, all the way down into this area and break this level. So this level right here becomes our ultimate low. Make it darker. Becomes our ultimate low, and that's the level we're trying to protect. Price is trying to protect this level. It is also trying to protect this 382 to 50 level right here. This is the balancing level. It could theoretically move down to the 618 level and still have support enough to pull it back out of this, but we don't know yet. So we're now looking at this as being in between the 382 and 50 level here, and that actually plays into this level way back here. And then I get rid of this box and this box. And then we're playing into this area here, this current 382 to 50 level off of this downtrend. So we're in a nebulous area right now. Could go higher, could go lower. More than likely, it's going to want to try to stay in this area. And we're going to see. Now, when it gets into this area, it's looking for direction. So understand that between this area, the 382 and 50 level, and this area, the 382 and 50 level, it is now actively seeking some new trend. I would bet, based on my analysis, that this new trend, bias wise, could be a fairly sharp move back down to this area and then an attempt back out over here. Now, we've got to see how this plays out prior to the election. But again, we do have some fairly strong upward trending, but weaker volume. I think we're going to see it roll back down into this area. And that again is going to be closer to the 618 area, maybe down into this area, and then roll out of it. But I think we're going to fail. And the reason I think we're going to fail is just simply because we've already seen the high price setup and rejection. We'll see how it plays out. We have a lot of kind of resistance over here in this channel. We'll see how it plays out. And if Bitcoin does roll back downward here, we will see. Remember, short-term bullish, intermediate-term bearish, long-term bullish. And moving back down into this lower channel for a base is not uncommon. Particularly, I want you to think about this, price moves typically in waves, A, B, C. So there's another reason why we need another wave down. Price is not complete on this move here. We need an A, B, C. We're also setting up, believe it or not, another excess phase peak pattern, rolling up, rolling down, flagging, and would likely break down. So I'm going to show that. as a super dark pattern. So when you start taking a look at these, you really get a pretty solid understanding here of, that might be the wrong color, but you really get a pretty solid understanding of what's going on. We're in the middle of a phase, we're in the middle of support, we're kind of in a nebulous zone. We're in the midst of an A B pattern, which would likely resolve to the downside as a C, just simply because price moves in A B C patterns. It doesn't move in these A B type patterns very often. So now you also have this excess phase peak pattern flagging, which means that a breakdown would be likely, setting up a new low, and then potentially building a base out of this and rolling. So we have a lot of evidence here that, we're in this pausing, we're in this congestion, we're trying to keep active, we're trying to figure out where, build a new trend. But in reality, we're far away from this level. We're in this rolling trend, and in reality, rolling down into this area from this 382 to 50 area, establishing a new low would seem like the most logical outcome to me, simply because you can see A, B, C. We actually have a pretty good move here. You have kind of an A, B, then you have an A, B, C to get up to here, possibly D, E. Then you have a pullback into the wave 4. Then you have a rally into wave 5. So even though it's kind of hard to see, it's clear to me A, B. That gives our first wave. Then we come up here, A, B, C, D. I did that wrong. So that would be A, B, C, D, E. Got to think this through here. A, B, C, that's too high. That's a roll. So that would be A, B, C, A, pullback, A, B, C. Okay, yeah, I'm doing it wrong. So what we have here is we actually have a ABC pattern. So you can see here, we have the A, B, C up. We have the one pattern down. Then we have essentially the A, B, C pattern up here. So that gives you your pullback range here. And your rally phase here. And your rally phase here. So what you're looking at here in these rally phases is a very clear, 1, 2, 3, 1, 1, 2, 3. So now here we have, in here somewhere there's going to be a 1, 2, 3 or a 1, 2, 3, 4, 5. But here we have a 1, 2 leading to a 3 down here. It makes sense to me that that's where we would want to go on Bitcoin. And I'm trying to spend a little more time on Bitcoin so you can understand kind of how this thing works. And remember, I'm looking at all of this stuff. I'm kind of playing into what makes the most logical sense. We're in a nebulous zone. We're in an excess phase peak pattern. We're flagging. We're searching for direction. We just failed here. We just failed here. Failure up here means that we're no longer bullish. We're moving into bearish. Failure here means we moved in a very short-term bullish trend. Failure here means we would move back into bearish trending. So bearish trending, and of course bullish trending until we get either below this level or above this level, meaning that we are likely in a bearish pullback, coming back down to this area, trying to find support before rallying back out. Okay, guys, that's it. I'm going to work on some coffee. Market opens in 20 minutes. Talk to you guys later. Try to leave you over here with this chart. There you go. Your roadmap for the week. All right, guys, talk to you later.